So if you can't find me. Obviously, I am in love with Wicked. And obviously, I am no Cynthia Erivo, but we are not here to discuss that. We are here to welcome you, and by we, I mean me and my undecorated Christmas tree, to welcome you back to another Millennial in-depth video and to welcome you to day 2 of 12 Days of Money, where I teach you all the things you need to know about money to be successful in 2025. Today, we're going to be talking about home ownership, and I know it's like, well, I'm not looking to buy a home. I'm already a homeowner, or I, want to stay a permanent renter, whatever it is. There's no judgment here, but it is just good knowledge to know if you are looking to purchase a home really soon in the next 12 to 24 months, or if you're interested in purchasing a home and you don't know all the intricacies and details. This is the video that I wish that I had back in 2018 when I was looking to be a homeowner. And it's also the video I wish I had it in 2019 when I closed on my first home. So we are here together. We are here together. So I saw a recent article on Bankrate where this is April, so I know we're in December. I don't know what the most recent, I probably could look it up, but here we are. The most recent numbers I saw from Bankrate is that the median cost of a home in the U.S. is $407,000, and if it's a new build, it's costing around $435,000. So that's a lot of coin. That is a lot of coin. Yeah, it is. So I know a lot of times when we talk about the prices of money, it can seem intimidating because everything's just so expensive. The prices of everything are up, but people are still buying homes, right? People still need some place to live, of course. So it's so important to talk about the inner workings of how to financially prepare, not only when you're getting ready to purchase a home, but also when you've purchased the home already, right? These are details that they don't talk about. So a lot of times when we hear about home ownership, we'll hear about the mortgage, of course. We'll hear about closing costs. We'll hear about down payments, but we won't hear about the other fees that can tend to pile up rather quickly. So this video is going to focus on those costs that pile up quickly on the back end, meaning when you've already closed, when you signed those documents and you got the key and you're moving in. These are the things you need to know about that are essentially variable costs or costs that kind of never end and you want to prepare for financially. The first ongoing and variable cost of being a homeowner is property taxes. Property taxes do not go away. And that is why a lot of times you'll hear people say, well, you never actually own your home because the government can come take it away if you stop paying those property taxes. And they're right. They're right. That is true. That is 100% true. But they don't talk about the fact that property taxes can go up or down, and there's really nothing you can do about it. Property taxes are based off of two main things. There's other small things, but the first thing is going to be the value of your home, and the second thing is going to be based off of the tax rate for the area that you live in. So for example, let's say I live in New York, which I do, and the tax rate is 2%, which it is not. Your annual property tax is going to be $2,000, which breaks up into about $167 a month, which isn't so bad. The thing is, most tax rates are not 2%. I actually don't remember seeing a tax rate lower than 5 or 6%, and that was when I was a child in my childhood home. On top of that, most homes in New York do not cost $100,000. So if we're looking at a $400,000 house with a 5 to 6% tax rate, you are going to be paying a higher premium annually and ongoing. Beyond that, another detail that is either very hush-hush or kind of spoken behind doors because no one wants to admit the fact that property taxes typically tend to go up. And that is a good sign, although it's not good for your pockets. You want the value of your home to go up. You want the value of other homes in your area to go up because that usually, not always, usually means you're in a fairly good, safe neighborhood, a neighborhood that has pretty good schools in the area, a neighborhood that has parks and all of those amenities of the town or the city that you live in. So it is a good sign when your property tax or your property value increases. However, it can increase tremendously without you being able to control much. And then of course, if your property taxes decrease, that's not the best sign, because that usually means the value of the homes in your area are decreasing. And that's usually a bad sign holistically of what is going on in the area or the neighborhood. The second variable, and likely ongoing, I know some people play a very dangerous game. I do not. So we're going to put it in my category. We're going to put it as ongoing cost of being a homeowner is homeowners insurance. Now, if you live in a condo or a co-op or in a town or city that has an HOA, you will likely have to keep that homeowners insurance ongoing forever, just because that is a rule of being a co-op or a condo. So homeowners insurance pretty much protects you from any flood damage, any theft, vandalism, natural disasters, but it is going to be very similar to how car insurance is calculated. So of course, if you live in an area that is a little more dangerous, or you live in an area that is a flood zone, or in an area that has a lot of natural disasters, your homeowner's insurance is not only going to be high, but that premium is typically going to increase, especially with global warming and all the things happening now. So people in Florida are struggling. Homeowners insurance in Florida is very, very pricey, just overall, no matter which company you go with. So that's something you want to keep in mind, that you might be able to budget and afford your homeowner's insurance this year, whether it's $500, $600, $700 a year, but it could go up to $1,400 next year. It could go up to $2,800 next year, and you will usually have to shop around to try to get a better deal. But when prices are up and inflation is high, it is going to be something that's really difficult to budget for if there is a sharp increase. And the last, and certainly not least, ongoing and variable expense that comes with being a homeowner is the maintenance. And I don't think people discuss this at all, not nearly enough, so I won't discuss it for us. Maintenance is quite pricey, especially when the cost of goods and services is up, because when you have a flood or a leak, or you have your heater goes out, or a roof caves in, you got to get that fixed. There's no landlord that's coming to fix it for you. You are the landlord of your own home. So you have to get those things fixed, especially if your homeowner's insurance is not covering it. I know a lot of people do say that you can get secondary, like home insurance for smaller things or appliances. You got to do your due diligence with companies like that, because there are scammy ones out there. But when you find a really good one, that will help supplement a lot of the costs that may pop up, like a leak or a broken appliance that you may not have been able to prepare for. The general rule of thumb when it comes to budgeting and saving for maintenance of a home is 1% of your home's value. So that makes sense for many different reasons, but I will use my own home as an example. So I have a very small home. My home is 750 square feet. And what I typically will do is have a sinking fund for my home where I try to keep 1% or more, because I live in New York, so it can be quite tricky, 1% or more of the value of my home in case I need to redo the floors, which I have had to do since moving in case I need to redo the bathroom, which I have had to do since moving in, or the kitchen, which I also had to do since moving in. And those things pile up, even if it is considered a small home. And so just for example, like I said, I live in a 750 square foot home, so my bathroom is not really that big. That bathroom remodel still cost me about $19,000. So if you have a much larger bathroom or a much larger space, you're going to require more materials, it's going to require more time, it's going to require a longer amount of service hours. And so that is why you can't just say, yeah, just put $1,000 aside for any home maintenance. If you live in a mansion, it's obviously going to cost a lot more to maintain than if you live in a 750 square foot home. So you want to keep that in mind when you're house shopping or anything like that. Okay, I have the money for this down payment, I have the money for the closing costs, I have the money for the mortgage, but do I have the money to maintain the size of this home if something goes wrong? And those are the 3 variable ongoing costs that you definitely want to keep in mind and budget for if you are thinking about buying a home, if you're looking to buy a home, or you're about to sign on that home right now. Adjust the budget, and I will catch you on day 3. Peace.